in these next 2 to 3 weeks, we're going to see more choppy, more volatility taking place. Now, as traders, that's fantastic. So let's go through some of the ideas in regards to how to manage yourself through the upcoming next couple of weeks. So, how do you react? How do you react, right? So from Friday's panic sell-off, for going forward, if we hear more news around the Omicron variant, how can we minimize or use this as a way of making profits, right? This is what I did on Friday. This was my exact process on Friday. First, I went through all my open positions. Any open positions I had, I would either look to protect those gains or minimize my losses, right? And there's 3 ways you could do that. The first is you can hedge your position. So if you're in a long position with a risk on asset, and it's risk off environment, that asset's going to go down, it's going to go against you, whatever the profit might be. What you might do is take an inverse position just to sort of protect the profits you've made in that trade. Okay, so that's one way you can go about that, right? If you believe that still trade is going to be on going forward, it's more of a swing trade or a position trade, and you want to sort of minimize the potential losses, you could take a short-term hedged position to sort of lock in some of the gains there, so you minimize the downside overall. So that's one way of minimizing that risk there. Second is any positions that you see are in losses or in quite a bit of losses close to your stop loss, I'll look to close them. There's no point hedging them. There's no point sitting on them, right? The market when markets sell off, it's gonna really sell off. It's just gonna, you're gonna see algorithms jumping in on the bandwagon. You see larger moves occurring, larger corrections occurring. So it's pointless if the market's already gone against you. It's now potentially close to your stop loss. Why hold into the position? Don't even think of hedging it. Close the position. Cut your losses quickly. It's a well-known quotation used in the market by traders. Okay, let your winners run, cut your losses quickly. So cut those positions, cut those losses. Something that's going in your favor, and maybe say a risk off asset. It's a risk off asset that you've taken a trade in, and it's now even going further in your favor, right? There could be a very sharp pullback that may occur in the markets, right, later on in the session, because of the exaggerated move. So don't lose out on those profits, right? Start adjusting the stop loss and try and lock in as much of those profits as you can, because that's a fantastic opportunity to sort of maximize the gains, not allowing it to go substantially in your favor, and all of a sudden you see your P&Ls jumped up significantly, your profits jumped up significantly, but it's an open position. It's still an open position. You haven't booked those profits, and that's why you want to trade stop loss as aggressively as you can, lock in as much of the profits, and then just look to re-enter maybe when markets are a little bit more calmer. So those are the 3 sort of key points I would stress when you have an open position on for maybe overnight for the last few days, or you're taken early on in the morning, and all of a sudden you see panic setting into the markets, right? Now, that covers all your open positions. Now let's focus on, okay, what's happening now, and can I take advantage of the situation ahead? And in order to do that, well, you need to sort of look for trading opportunities, right? So in times of panic and that selling pressure that might take place, you're looking to allocate your position sizing or your positions into the right assets based on the risk off factors, right? But also they need to be confirmed by the technicals as well. Technicals are extremely important because that's how you can really get good reward to risk ratio trades, right? So that's one way to allocate your positions into risk off factors, sort of assets, risk off assets. The other option is to, go into sectors that are more defensive. And now the difference here is risk off traders or risk off sort of assets are more macro assets, whereas sector and defensive focus is more I wouldn't say microeconomics, but there is where it's more for equity traders who have a great understanding of correlations and volatility and how sectors have an impact on each other during sort of these times. So to give an example of both, for risk-off assets to buy, okay, and this is to buy, meaning you're looking to go long, okay. So you look at USD, right? Greenback, it's the global reserve currency, right? Most individuals, most traders are going to go back to the USD. Yeah. Generally, we've seen a lot more of the yen and the Swiss franc being safe haven currencies. Okay, so you'll see individuals going to US dollar, the yen, or the Swiss franc out of all the currencies. Yeah. Gold, precious metals overall, right? Precious metals overall. So gold, silver, just focusing on gold. Gold is what I had taken long on Friday morning. Friday morning, I'd got into a long position in gold. Yeah, so gold's another option. Bonds, if you have access to bonds, okay. I don't trade bonds particularly, and it's not one of my 12 assets that I look at. But I have it in front of me, right? I know where sort of the not bond, but the yield is. I know where the interest rates are for the 10-year bond, and I look at that. But I don't trade it. That's just as a gauge. I use it as an indicator. But you can look at trading, buying bonds. So naturally, when you're going to see yields fall, that means bond prices are rising. Okay, the demand for bonds are rising. So bonds will rise, yields will fall. And in regards to allocating to sectors, you probably saw this in the previous image in regards to the US markets, how healthcare, right, pharmaceutical companies had outperformed where everything else was red. Okay, now that's another area that you can look into, right? Look into assets that you want to buy up based around the current situation, right? Being COVID, healthcare, and pharma would have been in focus. Now, that's one way of buying into assets when there is a risk off environment. But the profit is in the shorts of those risk off trades, right? So it's when there's a risk off environment, you want to go with momentum. Yeah, your short-term traders are momentum traders. You're trading in the direction of the market view, right? You're trading in the direction where the market's going, right? If it's going down, you don't want to be just buying assets that are okay and do go up by 1% or 2% or 3%. When markets are falling, you want to take advantage of that 50%, 15% fall, right? So therefore, going short is a great option, and it's definitely something that you should look to consider doing, especially in a risk-off environment. Well, now, oil had sold off substantially, right? So oil did sell off quite substantially. So looking back on Friday, where oil had opened, the open price was 78, pretty much 78 spot, right? So 78 spot, and it went down to a low of 67.38, okay? 67.38. Just looking at a percentage of that, so that is a 13.5% sell-off. 13.5% sell-off in oil. Now, why oil? Well, I thought oil was one of the best trades from Friday, and that's largely due to there's been a lot of recent rhetoric from the US and then grouped together other countries such as India to release production of oils that they've been storing. Okay, so there was that sort of fundamental being released at the same time we had OPEC Plus, who were looking to increase the production, but not to a significant amount. I think it was around 400,000 barrels per day, per month. And yeah, so, we're now seeing, obviously, with COVID, there's going to be maybe restrictions, there may be less travel, and that's all going to have an impact in the demand for oil, okay? And so much so, this upcoming week is where we're supposed to have a OPEC Plus meeting, and now that may have been postponed so that these guys can sort of review what's taking place in the market, what should we do, right? Now there's discussions potentially, or this markets are pricing in that they may reduce the production levels in the next couple of months to comprehend sort of any further outcomes from this new Omicron variant, right? So yeah, so going short in oil would have been a great option. As we've seen, sort of the equity markets as a whole had sold off substantially, right? So just equity markets as a whole had also fallen. And just having a quick look through, maybe if we look at the S&P 500 on Friday, it was at a high of 47.10, 47.10 with a low of 45.81. So in percentage, let me state the percentage there to this point of a hair, it's 2.7%. Okay, so 2.7% sell-off. Not a huge amount in comparison to oil, right? And that was the trade of the day, to be honest. But yeah, again, if you just look at the candle itself, it opened and it closed with a very strong sort of bullish engulfing candle. So it's a almost a Marabuzu candle. I see a very small spike to the low and to the high. It is a strong Marabuzu candle. So yeah, it's a strong sell-off day in regards to sort of equity markets as well. So that